Hey guys, welcome back to the channel. Today's going to be a different kind of a video. We do updates on Fridays now, or still trying to figure that out for the most part. And I'm going to see which works best for the channel. So today I really wanted to talk about is dividends. So a little bit about myself. I've been investing since 2017. And much like you guys, I'm not a professional. I have been listening to YouTube gurus talking about uh, all different levels of investing, how you can do with dividends, growth stocks. Uh, I'm into crypto. I've tried everything under the sun, anywhere from Joseph Carlson to the Plain Bagel, all the way down to Meet Kevin and that route. And the biggest issue that I've always come across when it comes to dividend investing has always been the same. You need so much capital before you're even able to see anything even happen and or to even seem worth it, which is why the debate always continues. Now, if you listen to the experts, they're always going to tell you to invest in something low yielding. Low yielding in this aspect would be something that's 2 to 3%, possibly 4%. I've even read that 5% can be a very risky thing. But the longer that I've been investing, the more that I've noticed that this economy has been going really, really, really bad for the average American, at least from my experience. Let's say like the median income, it's around like $50,000, $60,000. If you're living by yourself in a one bedroom, and most one bedrooms nowadays are anywhere between 1,200 on the low end to well over $4,000, depending on the neighborhood that you're in. And if you're spending that much money on just living, how are you really going to be able to do anything with investing, let alone with dividends, to even make it matter? So my solution for all of that has always been the same thing, which is we need family, we need a sense of community, and I feel that we've lost that. So, for example, we've never lived in a situation before where you've always had to live away from your family. Over the last 100 years and further back, it's always been you have your family, you have your kids, your wife, your mom, your grandfather. Everybody is in either the same house or within the same neighborhood, and everybody's able to pool their resources. That's not happening anymore. We've been drifting further and further apart, and I'm pretty sure you guys can feel that both in all aspects of just from investing to everything else. Now, the solution would be dividends. And that's why I started this channel. I really want there to be a sense of community because by myself, making the median wage, it is almost impossible and is growing more and more impossible as inflation keeps going up, whittling down the value of the dollar. So if you can, in your own world, what am I suggesting you do? Because I don't want you to not invest. I want you to keep investing, whether it's $20 a week, $50 a month, whatever you can do, always put it into the market. But I really want you to start having better relationships with either your friends, families, people around you that are struggling, and showing them these kinds of videos, showing them that through dividends or just through investing, period, it's going to be the only way out. And it's now the new starting off point. Before 20 years ago, 30 years ago, even 10 years ago, you could have just purchased a home. The rates were smaller, the housing prices was a lot lower, making it a lot more easier for the average person to be able to get into that. And even if you couldn't, it wouldn't inconvenience your family to get to that point. But now what I'm noticing is even large families that are really relatively close, because they're so separated and because money is so tight, they can't even afford to buy a home. But let's imagine a scenario where there's four of you and you're each able to contribute $50 a week. That's $200 to $800 a month so on and so forth. If you get into a moderately risky dividend, which is something that I would probably consider would be JEPQ, or even what we have in the portfolio, which is like FEPI or AIPI, which yields closer to 25 to 35%. Then you can realistically start using that money as not to live a lavish life, but as a starting off point where you can then say, hey, we're going to use this family as a family that's coming in through dividends to build it up to the point where we're able to either purchase a home and then relieving the financial burden on us, or using dividends for paying off a bill, paying off most of the bills. That will go a long, long way for most people. Because realistically, I know so many people that can't even afford basic groceries. And depending on the situation you're in, or depending on the state that you're in, you're not even going to be able to get assistance for that. Or your family's not even going to talk to you, or they don't want to help you. But if you're able to stop thinking of money as a means to an end and more as a tool, as a way to say, hey, if I have X amount of money within this investment account, that means that all of these bills that I have are gone. Or I don't have to worry about that. I don't have to stress that. Now, is there going to be risk? Everything has risk. Everything you do has risk. You going to a restaurant is filled with risk. It's just a matter of having calculated risks and whether or not it's worth it. So I've been investing, as I mentioned, since 2017, starting with slowly $20 a week, 25, 50, anything that I could. And then I really started noticing a big jump around 2022. That's when I started making over $100 a month on dividends. So it took a very long time. Then I started getting far more aggressive with it, which just in plain terms mean I stopped listening to the professionals and more than likely the logical people, because I just felt that they didn't apply to my living situation. When you're not making enough money or you don't have enough capital to start investing, you can't just say, hey, I'm going to live off of Apple that makes 1% dividend yield and each of those shares will be over $100. You just can't afford that. It doesn't make reasonable sense for you to start investing into that. If you're making $1 million a year, yeah, that makes more sense. But what I'm trying to accomplish is for the average, everyday, median income person. Not averages, not if you're making over 200K a year, congratulations, this video is not for you. But if you're working DoorDash, Uber Eats, if you're living paycheck to paycheck, this video is going to be for you. Because you're going to have to outweigh risks versus rewards. And in my experience, in the short years that I've been in trading, the risks do not outweigh the rewards. It's an amazing feeling when you can choose to not work for a few months, even though, like I said, I'm only making $500 in one of my accounts per month. That's enough for me to say, hey, this covers most of my regular bills. That's my phone bill, my electricity bill, everything else. And then it gives us such a large cushion to any savings that I have. Now, you're going to have better saving principles. You're going to have to learn about debt management. You're going to have to learn about all these different aspects of it. But I feel that together, we should be able to make it work. Thank you.